This is Joshua Hayes at BigWaveTrading.com coming to you with Thursday's market wrap-up. Nothing has changed since yesterday, and as I want to show you on the NASDAQ, you can see that the NASDAQ finally has resolved itself below the 50-day moving average. I know you can barely see it, and it looks like it's actually holding it, which it might be, but if you notice something, the stock fell, the index fell 0.66% and volume increased. That means since we've come back from our little vacation, those 2 days of volume have been much heavier than anything we saw while it was basing out. So it appears the NASDAQ is breaking down somewhat on heavy volume, which should definitely not have you invested in stocks, because I've shown you enough past big winners that you should now know that this price should be above this white line, and this white line should be above this magenta line. I'm still getting questions about what stocks you all should be buying out there, and I'm not sure why you guys are not comprehending this simple focus factor. Look at the New York Stock Exchange. It is the exact opposite of what you want to see when you buy stocks. You buy stocks when the price is above the white line and the white line is above the magenta line. We have the exact opposite. We have price below the 50-day moving average and the 50-day moving average below the 200-day moving average. Along with that, volume is picking up to the negative. I know there was a nice tail today, but it doesn't matter. The fact remains, since the October 31st top, the index is down right around 19%. And there's no way to look at that and see anything bullish about that whatsoever. So the New York Stock Exchange, with today's minor loss and increase in volume, shows that the trend is still down. And nobody should be looking to buying stocks. I need to stop. I'm getting sick of hearing, Josh, is this okay to buy? Does this look good? Does URBN look good? How about BKE right here? You know what, guys? You guys should not be going long, even if they're going up. BKE is going up in a nasty fashion with there's 3 huge distribution bars as it moves up. If this is a stock you want to go long, I don't know what to tell you. It's not one that I suggest. URBN, look at all the yellow and the red bop. I know I'm long this stock, but that's because I know how to buy only 100 shares of something and not like load up like 10,000. I know the guy that knows that I'm talking about this knows that I know that he's like 95% cash, so that is good. But the point is, does the stock look like this? If the stock doesn't look like this, the bottom line is you should not be going long. That's it, period, right here. Since the breakout, it's now up 93% in 2 months. So in 2 months, we've made 93% on buying the correct stock with the correct green bop and heavy accumulation. All these stocks that I get shown are just ugly. That's ugly. That's ugly. It might be in an uptrend. It might be able to make you a little bit of money, but I hate to tell you it. I'm not in this for a little bit of money. I'm here to get wealthy. And if I can make a little money on the side while I wait to get wealthy, that's fine. But you're putting yourself more at a risk about buying a stock like this and having it pull a Dell on you. As you can see, there was nothing wrong with Dell there, was it? Everybody thought Dell was okay there, but the next 2 days, all of a sudden, you're down 18%. In 2 days, you're down 18% because you bought a stock that was in an uptrend while the market was in a downtrend. There isn't much that's in an uptrend. I mean, if we look, here's what's in an uptrend. Let's look at the hospitals. I believe that's 525. Memory serves me right. Look at that. If I can pull this up off memory, you guys should obviously know that I know what I'm talking about my stocks. Since the October 31st top, it has barely gone up. Besides that, I know that there's a 515 group that should be medical, should be biotech. No, that's the drug-related products, which, as you can see from October, it's still going up. It's still moving higher like it should. Biotech should be 516 then. 516. There's biotech. And as you can see from October 31st, it's up. But look at how much it's up. It's up only 5%. Folks, that's not a big enough uptrend to make a lot of money on. The XSI is something special, and that's something that I told you to buy here on 8/13, and in the first time was here on 6/25. Let me show you what I turned on CNBC for 10 seconds yesterday, and the guy mentioned 2 stocks to buy. Halliburton. Number one, Halliburton was having a major reversal the moment he mentioned to buy it. And now today it's down another 3%. Once again proving that these smart money managers in bear markets come on CNBC to unload on you. Why you guys think you should be buying these is beyond me, and I hope soon, after you lose enough money waiting for this next bull market, whenever it finally comes and you have half of your current portfolio, you'll understand why I said not to buy these stocks. The next stock that was recommended was a stock that was breaking down below the 50 and 200-day moving average on very large volume. He was telling you to buy National Oilwell Varco, NOV, and while it was falling 9.4%, it was falling 9.4%. Clearly it's made a top in July with the rest of the oil stocks, and yet this guy was telling you to buy it. What did it do today? It fell another 5.3%. And at one point today, it was down over 5.5% when I looked at it. And I knew immediately he sold on top of all the quote dumb money that was watching on CNBC. This is why, for all of you that are watching my videos now that waste your day on CNBC are probably not long XSI. I guarantee there's a correlation between people that are watching CNBC right now and a correlation of people that are not long the only nice stock that's out there. I'm telling you, you're wasting your time on this channel. And people like Kramer, I can yell all day and get crazy about stocks all day. That proves nothing. I heard he just told his audience to buy National Oilwell. I was told that today he said to go in there and buy NOV. If he's doing this for a trade, that's fine. If he's doing this for a long-term trade, this stock could easily be cut in half by the time this bear market's done. Another one he's recommending buying is one that I'm currently cutting my loss on, Celgene. I bought it here on the breakout in July, but as you see, it has been rolling over. And yesterday I got out of almost all of it with a negative 1% loss. Compare my negative 1% loss to all the 50% losses Kramer gave you on the most latest downtrend when he told you to buy Citibank all the way down. You people have got to learn out there that CNBC and RealMoney.com don't have your interest in hand anymore. At one point, they probably did, but Wall Street's gotten too big. The big funds matter most, and the big money is where they go. They just did the top traders under 30. Do you know that they all come from hedge funds? They don't even do their research out of the hedge fund world. It's a small world, and they're in a small group, and I lived it for a few months. And I'm telling you, it is disgusting. That's why, while XSI is up 95% from my first buy to now, you have not heard it mentioned once on the air of CNBC. And you're not going to hear anything. Why haven't they mentioned this one, NTCT? It's got incredible earnings and sales growth. But yet, I never hear it. I do screens and I ask people that watch all day if they've heard of these things, and they say no. And you want to know why? It's because CNBC has got trapped bulls right now in major institutional funds that need to get out. They need to sell their Lehman Brothers to you. They need to sell their Deutsche Bank to you. So they say buy. They need to sell their NOV to you. So they say buy when it's completely topped and rolled over. The only time to buy is when the indexes are in an uptrend. That's when you get your 100, 300, 500, 1,000, 1,500%, 2,000, and 2,800% winners that I showed you completely in Taser. Every past big winner that I've shown you has shown the trend up in the indexes. And when I look at the New York Stock Exchange, I see the exact opposite. I know some of you want to put your 5% of money to work, but unless the stock looks like XSI, you do nothing. Do not force trades. All of you out there that are newbies, it's not the experienced guys, want to keep forcing trades in ugly stocks that sometimes you see me buy because I know how to buy 10 shares of something, like I said, instead of 10,000 shares. XSI, why didn't I load up on XSI? Because, once again, the trend is down. The trend is down. Here's the New York Stock Exchange for 3-letter stocks. Here's XSI since then. Completely uptrend. Now, can you imagine how much XSI would be up if the New York Stock Exchange was in an uptrend?